Hey guys, Elliott Wave Sage. I want to go ahead and do a market overview. This overview I'm going to share with the public. I'm going to kind of my early Christmas present to kind of just give a bunch of people that may not have subscribed or are thinking about it or haven't found out about my channel. So this update will go to everyone out there. So this is a market overview for those that aren't subscribed. That I typically do. I cover most of the instruments. I update this daily during the week, except for Fridays, and then we have a weekend update as well. And basically, I'm covering most of the indices, then gold, silver, and you'll see later on in the video some of the currencies as well. So we'll go through the market overview. I think it's an important update that I want to get out there because we could be at this inflection point that I believe the market still is trying to figure out in terms of what type of pullback are we going to get. I think, for the most part right now, the market is behaving as if it was in a 2022 style correction. This is what I talked about on my live stream yesterday for those who could join. And these types of drops and surges were common in 22 as it went all the way down. Now, we haven't had the first real big decline yet. That's going to define the rest of the cycle. When that happens, then we'll know, are we dealing with a 2022 correction or something far worse? I believe investors piled in at the worst possible moment if they were actually buying toward the end of last week. I think last week was just about to trap people, just to get enough people excited to let their guard down, and also get angry enough that if they had short positions, they closed them, and or they will never consider potentially even going long volatility again. So the market's just doing everything it can to get rid of that short side leverage, and now it's ready, I think, to make this turn going into December, like we have here. So we always use this Elliott wave, idea, label our charts. And as you can see right now, the Dow Jones, if I just label where we are on the shorter cycles, we're showing 5 waves up. Maybe one more high. I could be off by a swing and we could have already finished, right? So this rally is likely to reverse and fail pretty soon, okay? It's likely to do that. Now, once this happens, what can it morph into? Well, the next wave down is 3, and that would complete this kind of head and shoulders top. So that could create a lot of waterfall panic selling, a lot of trap buyers that did buy into the narrative that everything's okay, the Fed has our back, the Fed's going to keep pumping the market, no problem. But I believe what we're seeing in the metals with the Fed easing and people trying to front run that is now you can get that runaway inflation in metal prices, right? We're going to see it in platinum and copper, and it's kind of like it kind of defeats the whole purpose that they're trying. If they're trying to inflate the market and then try to drive stocks higher, if that's the goal, then it's going to bleed into the metals and commodities, and that's just going to slam the market back down as things get too expensive for your manufacturers and producers once again, and then demand and the slowdown will drive the market back where it needs to be. We also know that also will bleed into energy prices, and they risk oil breaking out. So this is what happened in the 70s and created the stagflation, cutting rates at the worst possible moment. And we may be repeating the same mistake again. And the market is already at such elevated levels in terms of metal prices. I mean, I would worry if you saw a copper moon and you saw platinum moon. Like, what is that going to mean for industrial producers and their costs? So the market, and then of course inflation, that will carry in inflation, and so then the Federal Reserve will be left with having to either back off of this easing and lower rate like mindset, or they will succumb to it and we'll get some kind of hyperinflation outcome. So we've always said on our channel, any breakout where we just go straight up is a hyperinflationary scenario. That means the powers that be decided hyperinflation is the way out. They may not call it that. They'll never say it. Those words will never be spoken, but that's what they're trying to do. Just devalue the dollar to print their way out of their problems. So here we are. We're at this point. I don't believe that's going to happen. I believe whatever perceived rate decrease they think we're going into may not materialize the way they anticipate. That's what this graph could show. This other outcome could be a growth scare. Something comes out in the next several weeks that shows the economy is in a really bad situation, so bad that it doesn't matter whether they raise rates. The economy is dead, like not moving. And we don't know that situation because we don't have the Federal Reserve information out. So the Dow Jones is because they haven't been, the government shut down, they didn't release the data. So here we are looking at a 5-wave down move. We can keep going lower. It doesn't have to end here. We've talked about the grand super cycle could have ended. Now, what happens from this point on is going to be a really tough call, but we'll be watching it. And if you subscribe to me, you'll know how to navigate this part when this emerges, where to buy, when to sell, when to go on the sidelines. So as you can see here, we're right at the turning point. We're right at the turning point. Okay, right at the turning point. The triple Qs. Another flat, and again right at the turning point. All right, and we see, as we go into the shorter cycle, the divergence, the momentum divergence building, right, and that is typical of the impulse. Okay, at the 45-minute, you don't see it because you're seeing the 3-wave nature of that connector. So that's what makes it tough to try to pinpoint here because it's so extended. So normally the 45-minute is our guideline, but in this situation, it's too extended to use that. I have to go to the shorter cycle. The SPY also hitting a dangerous area where it could reverse. Again, there's always possibility for just a little more upside, but it's a very dangerous moment. These are very dangerous situations the market's in. The IWM also pushing higher in a flat, could come to an end pretty soon. Now, with the IWM reversing, this is one of the clues I look at is the KRE. And if we go back and look at the KRE, which is also hitting a sell area from a 5-wave down move, if the KRE cannot break out, then the Russell cannot break out as well. It's a false move. No KRE means no Russell bull market, right? If the KRE can't advance, then the Russell can't advance. So the KRE is telling us this is probably a fraudulent rally. It's a sucker's rally. A lot of people, again, FOMO in here, are going to learn the hard way, unfortunately. And it's going to be a sad day. The only way to change that view is if we can see the KRE rally. The KRE needs to rally. The KRE needs to rally above 66.70. If it can't do that, I can't go into a bullish forecast. But if the KRE can take that out, then the Russell may lead the way higher. And then our forecast for that more inflationary and potentially even, shall I say, hyperinflationary path could emerge in the market. So watch the regional banks for a clue on where this may end up. We also look at the Hang Seng on our channel, as you can see here. Right now, it has a couple possibilities. We could have BN here, and then where it got rejected, kind of where we expected it to. And now it's either going to form a triangle and then have another move down, or it's about to collapse like the potentially the indices. So when I say a triangle, it could look something like this. Okay. Or it's finished and then you have some kind of 1-2. where you come down like that. Okay, whatever it ends up being, it's likely to come back down if you're patient enough to 23,861, somewhere in here in this area. Okay, after that, there's always a possibility for a bounce and another low, but this is kind of where we would be looking for support. All right, Bitcoin, everyone's talking about Bitcoin. So the big picture on Bitcoin is we have it on a 1, 2, 1, 2, 3, 4. So we're still calling the 4s and 5s. If we come back and take out this level, then we have to be in this higher degree waveform. Okay, but the outcome is still the same, lower prices no matter which path, right? We had the flash crash target was hit. We had the short target, which we're still in. Here, these trades are again provided to our basic members for only $5 a month. If you really go back on Bitcoin too, we had the buys here and kind of had opportunities to sell depending on your trading strategy for profit in any of these at any of this point, right? We even had a sell here and a sell here and a buy here. So we tend to get Bitcoin right, and then when we're not sure, we go on the sidelines. Like the April was kind of an irregular bottom, and then we went on the sidelines because typically we see a flat. And the irony is we did get a flat. It just went to the most extreme level that you could have expected a flat to go to. So in the end, we're still seeing a flat emerge. They really pumped it before they decided to do that. So now where is the target going to go in Bitcoin? So right now we're targeting 49, 48,000. It could go there quickly. It could take a long time. It doesn't matter. We want to patiently wait. And we usually see the whole fifth wave. We lose that typically on these cycles. And so this would be the confluence and area that I'm looking for, right? And I really, if you don't have a position or you're looking to go long, you're better off waiting and being a little more patient. And not over trading this right now. Bitcoin could have topped on Friday on our live stream. I think we called that top the exact moment on our live stream. We'll see if that plays out to be the case or not. Okay, if we can come back and take this out, we're in another 4, right? And then we're looking for that $100,000 target, or just a short squeeze, a truncated 4 back to the trend line. So it has a couple paths there. Oil's also showing you that something much more sinister is lurking behind the curtain right now that most traders aren't seeing. If this plays out, we're about to break down this top, this continuation pattern, and that should bring in sub $50 prices in oil, likely a growth scare. Okay. This could be on the edge of the cliff looking down. Now, can the Fed lower rates, pump the market, quantitative easing? Trump gives happy talk, and this reverses with the market. It can, but you better be careful what you wish for. Nixon, I think, and Jimmy Carter regretted this situation, right? And you started pumping oil, and then you had the embargoes and everything else that came later because as higher prices, people started doing irrational things. And that's going to happen again if it's not allowed to correct and they pump it. Then you're looking at a bigger connector, and you're looking at oil likely going to $120, $122 a barrel in a larger degree connector. And the general public and Main Street are going to be super pissed off about that situation. So you can't have your cake and eat it too. You want rate cuts. You want rate cuts and quantitative easing. You can't do that with oil going to where it is. Perhaps that's why Trump wants to go into Venezuela. Maybe he understands that dynamic and he's trying to get more supply onto the market. Who knows what the strategy is, but this is something that you want to pay attention to. If the bear case emerges, it's telling you this is about to drop hard. Gold still jammed up and could be a triangle if it goes down tomorrow. If not, on Monday. If not, it's a bigger connector. And we talked about this could also, develop something like this, right? And then come down later. It is divergent from silver, as we'll see. This could also extend a fifth wave. We've talked about that too, right? And start to move higher and extend this 5. So it has a lot of options. So we don't really trade it in this area, but a lot of our members who are early members, we got buys here, here, and here. And of course, I'm advising all our members to stay long. There's no reason. And if you followed me even earlier, we were long even earlier than that before I started my member service. So right now, gold's in the middle area. We don't like to trade the middle area. However, this is the area traders love to trade the most and lose the most money. So we need to wait for it to either capitulate and you have another opportunity, or you rise and we know the trend is the next leg has started and you buy the next pullback. Silver was the talk yesterday. We were expecting a fifth wave before it peaks in its super cycle degree 3. This syncs it back up with gold. It was kind of out of sync. So this is an interesting situation. And now we have this 1, 2, 3, 4, 5. Our target we gave, was somewhere around 56.69 on our live stream, watching it break out. Now the market will have to decide, what does it want to do? And silver, I think, is also something that is hanging over the head of the market makers. Clearly, we're in some 5 here. Now, if this can erase the daily cycle divergence, it will turn into another 1, 2, right? It will be a 1, 2, 1, 2, and we'll go into 3 of 3. And you could just use your imagination. We'd have a massive short squeeze. We can't rule that out. My guess is the market makers and the banks will not allow that to happen. And they will want to, I would be willing to beg and crush the market down to prevent that from happening, is what I suspect. And if that does get out of hand and silver does get out of hand, you could see some banks under a lot of pressure who are naked short this emerge. And I don't think the mood right now is to be bailing out people for their irresponsible behavior and bets gone wrong. And so that it's different than 2009. I don't think there's bailouts that are going to be going around without. And if Trump will bail out anyone, it's going to be a huge sacrifice. He'll make the CEO beg on TV and commit to all these concessions. So basically, have to give the company away to get the bailout if that's what has to happen. So likely we're having some fifth wave here, and then a pullback, and then that puts us in sync with gold. Gold not making new highs while silver does also is a hidden bearish divergence within this sector. Okay, that maybe the precious metals just isn't ready. Now, if gold can get moving, then maybe we are going to see a 3 of 3 emerge in silver. We don't like to sell silver, and in fact, our members have been long from here and here, and even way before my membership service started, way back down in this area, back down here. So we've been holding silver for a long time. On my channel, people who followed me, this situation was inevitable. And yes, the technical damage is already done. The bankers are only buying themselves time. It's going to break out. It's going to be a big news event at some point in the next 3 to 4 years. I think this is the most likely path that you're going to see. And then when this finishes, you're going to see that silver squeeze and moon situation that gets out of hand. That's the more conventional path. The unconventional is it's already started and no one even realizes it yet. And if it does, I believe that's going to create its own black swan moment for the market. And they did, as you know, shut down the commodity futures market yesterday as it was breaking out. And the rumor is some big banks were short and they needed to scramble for liquidity and they didn't have it. And I guess $24 billion emerged and they borrowed. And when I hear the word borrow, that means they really don't have that either. So if it keeps going higher, they won't be able to borrow anymore. So then they blow up. So I bet you this weekend there's some phone calls happening where these banks are begging, I call Aladdin or whoever moves this market to drop it. please God, drop the market. We need silver lower. We're screwed if this keeps going. We got to drop the market. And now the banks have a question. Are they going to drop the market and work with the market makers to have a rug pull to save those banks temporarily, or are they going to allow it to just happen because there's too much pressure to just have higher indices and too much pressure to get people's money in, as they're in the holiday spirit and they are home on vacation and they want to continue to buy stocks. And they're in a seasonality, and Wall Street ends with a great year. So there's this competing situation that's emerged. Like I said, you can't have your cake and eat it too, right? You're either going to get higher commodities and inflation and higher interest rates, or you're going to have to not you're not going to have to ease and you're going to have to tighten, and you're going to have to, not support this quantitative easing situation, and that will allow you to, control the inflationary pressures, because once it gets out of control, it's hard to get it contained. Okay, natural gas is also starting to break out a little bit. All right, let's look at the dollar index. Now, the dollar index shows the path here where I believe we go higher. This could be risk off. This could hurt the metals. This could be that correction, the final push in gold down. This could be the end of wave 5 in silver. And then when when those corrections end, then you get this big dollar decline. This could also be the final push down in Bitcoin. And then they all find bottoms: silver, gold, and Bitcoin. And then they all go into a big uptrend together. Perhaps there's a growth scare, right? Risk off. And then Federal Reserve goes super ease, let's just lower rates and screw the dollar. And maybe there's even stimulus given, and then the dollar just is crushed. And then this wave here also coincides with this wave I see happening here, right? The 3, 4, 5, right? Because I don't think the grand super cycle is over just yet. I think it can morph into something like this right now. Something like this and top. The only way we get the grand super cycle over and allow the other stocks to finish is a sideways grand super cycle correction. And that would have to look something like this. This would have to look something like, some kind of like A wave down, and then a big B wave, and then a C wave crash, years later, right? It would have to do something like that, right? And again, that's another path that the grand supercycle correction can take that I don't think investors have fully mentally have grasped, especially a lot of Elliott wave practitioners. It can do this, and then somewhere here crash just essentially straight down in a risk off. So this could be that dollar index pumping. This could be it falling. Everything pumps. Some sectors melt up, some don't, but the indices don't, kind of trade sideways, and then it all syncs up and everything crashes in the great deflation that as you overbuilt capacity, the commodities now are just too high again. Gold and silver are way too high. Bitcoin's everything's just too pumped, just like it was in 2007. So that's just something to think about. That's another path the grand super cycle can take. So again, looking at the dollar index, as we can see here, the dollar index here likely to go higher. As you can see, the dollar index likely to push higher and then reverse. If the dollar index does not reverse, then the perma-bear count could be right, where you just crash straight down in a horrific crash, deflationary collapse. So this is likely the likely path that I see. So again, this is your A wave in your pullback, grand super cycle or not, April lows. This is your pump. Perhaps this goes on for quite a while. It may not fall straight down. It may take a long time, but this is your connector wave. And then the next leg out is your final hurrah, this wave, right? That's your great crash wave that comes later. It comes later. Again, timing's tough with Elliott waves, but it could, like I said, this could play out over a period, something like this, and then this could meander down around, right? So it has a lot of possible paths, okay? A lot of possible paths, but that's what I'm thinking right now. The Japanese yen is also telling you dangers may emerge. We're going with a triangle. Going with a triangle here. So as you can see, updating this a little bit, and then once this completes and we get this final leg down, this is usually a massive risk off. The yen carry trade collapse, and this could drive the markets down quite rapidly, and also this may indicate some selling pressures coming to the market as this D wave emerges. I think again the triangle is where I'm going with. There's a couple ways to label it. I could put this back in X, but I use the RSI to help navigate and label our corrections. And so just looking at the recent data, I'm going to go with this count for now. If we come back and take out this peak and take out this peak, then we would update this to be a bigger three-wave move. And then it would have a more conventional pullback. Okay. All right. So the market overall, these are the instruments I normally cover. I cover this every day. We talk about different trades and boxes that you can take. These are trade ideas that you can take. Not all of them work out. A lot of them do. And the ones that do, our members have been pretty happy. And you can go on my X and you can see the posts of people that are happy with my service. And I don't lose subscribers. I barely lose any, especially my elite members. I may lose just one or two through, natural attrition, 2 or 3 here and there. But I have, quite a few that have never quit. So the service must be providing value if my retention rate is over 90%. It may even be higher than that if I calculated it out officially, but I think it's at least over 90, maybe even 95%. So I must be doing something right. So there must be value in the service. Now, elite members, I cover every stock, every instrument, and we do boxes and we come up with trade ideas. And then we also have a pro service. Pro service is big cap tech, and that's for $20 a month, and I cover the big cap tech and a few meme stocks that kind of carried over from the earlier cycles that people really love, and I've continued to cover those. Those are my service. So if you're not sure, I encourage you to subscribe. It's only $5 a month just to kind of dip your toe in the water and get a feel for it. Here, I believe for $5 a month, some people have made quite a bit more than that using this service. These ideas have helped. They sometimes are unconventional ideas because they go against the grain. They go against what you hear on TV, because a lot of times what you hear on TV is used to manipulate you as a trader. It's used to trick you and trap you. I know people don't want to believe that, but that's how the world is. Without sports have referees for a reason, because people like to cheat. So if people can cheat, they'll cheat. And I believe the big funds and everybody else, they'll do what they can get away with. And so you see a lot of bad information out there, a lot of misdirection, a lot of things that make no sense. And a lot of people, are confused and they're misled. And we'll find out if this is another opportunity, another situation where that's happening right now with the proclamations that market's going the surge higher. Now, like I said here, I think the way to wrap it up is right now we do like to always buy the market in 3 waves with the trends. With the lower low, we don't like to buy that type of setup. Right? Remember with Bitcoin, the flat does come back to haunt the market. Sometimes it's early, but sometimes it can be later, like we saw. So even if this does push higher, I would believe it's still a sucker's rally. And yes, it would feel good, and you may feel stupid, but I much rather wait on the sidelines or wait for a clearer 3 waves to join if I want to try to play a connector. But I would rather just wait and let this wave develop and be patient. And if you're patient enough, the opportunities emerge, incredible opportunities. The ones that are impatient, those opportunities, you're never part of, because you overtrade and you're not patient enough to wait. So right now, I think the indices requires patience in this middle area. It reminds me of what we saw back in February and April, the time frame back here. If we remember, this required a lot of patience to wait through this mess. Okay, right? A lot of patience needed to wait, but if you were patient, you were able to get the three-wave pullback down. All right, guys, that's all I've got for our group today. Good luck, and let's see what happens next week.